Hi, everyone. So I've been asked a fantastic question on the hedge fund collapse, or it looks like a collapse anyway. They didn't meet their margin calls in the US, Archegos, uh, and whether it's a unique buying opportunity for mere mortals. I was asked, and it's a great question because, of course, if there's a fire sale and something like Viacom drops 50% in the space of a few days. Now, I've got to go back, however, to the broader strategy that I have. Well, are the stocks that I'm looking at in terms of valuation, growth, income, cash flow still solid? And let's say they were. And Viacom, as you'll know, was one of our picks from a year ago, and it had tripled in value, something ridiculous, which didn't ring alarm bells for us. And it's just because some of our stocks do that well. So the issue is, well, now it's dropped 50%. Is that a buying opportunity? The fact that it's dropped in and of itself isn't. That tactically might be a reason why I look at it, but let's not mistake tactics and strategy. The strategy still has to be, how does it look at this valuation in terms of valuation of the company, revenue growth, earnings growth, cash flow, its ability to outperform the market, and so on. Now, a lot of those things won't have changed. The only major thing that will have changed is the price of the company. Because of the fire sale, everything else is still exactly as it was before. And if, despite a 50% drop, the price of the company on a valuation metric that we would look at is still overvalued, then I'm not going to buy it, because then that would simply be a momentum trade or a trade for a different strategy, which is I'm buying it because it dropped sharply over a short space of time and it might bounce up. Now, that strategy might be legit, but you got to think, if that's my strategy, well, let's make sure that it in and of itself makes sense. So the alternative strategy, as I say, may well be, well, let's look at the ones that they've been fire selling and let's just buy into a whole bunch of those on the base they'll rebound. I've not done the research on such a strategy. I may not want to do the research on such a strategy if I think, hey, I'm fine with my existing ones. So I'm not trading my investments is another thing, essentially what I'm saying, which is if I've got a 12-month investment portfolio and if I've got a strategy which works on valuation, growth, income, all those things that I teach, then trading on the back of some short-term news item has to be because, well, that's trading. That's not investing. In which case, take your investing hat off and put your trading hat on and look at doing a strategy around trading. Okay, don't confuse the two, otherwise you will chase your tail. That's not to say that there won't be a massive bounce up in Viacom and some of the other companies that were sold off in the fire sale. It's just that I stick to what I'm focusing on, and I don't get moved around, let's put it that way, by other things. Hopefully that makes sense and gives a good understanding of what's going on.